And we are live on Oz Property Investors. We bring the big names and we have the big fun. And tonight we have one of the biggest names in Australian share education, Louise Bedford. I'm excited. How are you going, Louise?
I'm so excited too, Jeff. It's been a long time since we've had a chat like this.
It has. It definitely has. Yeah. It's we were talking before the show. We're just trying to figure out exactly when it was. And you were saying in Toronto in around 2017. That is an impressive memory. I know it was a while ago, but I would not have remembered the exact. I could probably pinpoint. But yeah, good on you for having that memory. And Joe, how you going, man? How's your buying going? You buying plenty?
I'm buying plenty. I'm buying much and much and much. But I got new shoes. And every time you buy new shoes, you feel like a kid and that you can run faster. That's one thing I think is always going to stick with you. You put your new shoes on, you can run very fast. Nothing to do with wealth, nothing to do with shares, nothing to do with property, but I got new shoes. That's me. What about you, Jeff?
No, I'm really, today felt pretty quiet, and it's interesting because I with the 2 shorter weeks, and I had a 3-day week last week. It actually feels like I'm starting to get back to some sort of routine. So, but yeah, great day, fantastic, super excited for this, and I'd love to see people like hit the like button, throw some comments and questions, because the more you show like, the more people get to see this, because I'm excited to share the content that Louise is bringing tonight. So let's jump into the quote of the week, and our guest should go first. So Louise, what is your quotes that you have prepared for us?
One of my favorite quotes is, I don't know where it came from though, but to know and not to do is not to know.
Oh, yes.
I love that one. That's I feel like it's an ancient Chinese proverb, perhaps.
Feels like it, doesn't it? Yeah, it's got the Kung Fu Panda type of view to it, hasn't it?
Yeah. I love, good. But I know that's a great quote, because I think it's important, because we often sort of focus on the knowledge or sort of reading books and listening to podcasts and doing those things, but we don't, until you actually either sort of necessarily bite the bullet or do all those sort of things. How do you solidify the knowledge if you hadn't had the experience?
Absolutely.
Yeah, it's so true. It's like business and anything. If you just keep educating, it just doesn't get you really anywhere until you've actually jumped in and implemented something, and then all of a sudden it all kind of comes swimming back, and you're like, oh, that's where this comes in handy, and that's where I can use this trick and hack. What about you, Jeff? What's your quote of the week?
So my quote is, if you're the smartest person in the room, you're in the wrong room. So I don't actually know who that quote was from, but I think for me that's a part of the reason we created this group, Joe, because we were sort of, I'm not saying I'm
not the smartest people.
No, but the room
was our goal, Louise. Every guest to be smarter than us, and it doesn't really take too much. So I don't know if that's a compliment to you, but you're definitely the smartest person in this group at the moment. So
yeah, you are. No, it was sort of. I think it's very important, because you want to make sure that you're hanging around people that have, I suppose, achieved or have some sort of knowledge in what you're looking to do. And I didn't necessarily have a whole lot of those people in the rooms when I was growing up. So. That's kind of really hits home for me, that quote.
Yeah, it's a good one. It keeps you on your toes. It keeps the 5 people that you hang around the most, and if you can hang around with 5 intelligent people, you're going to be the 6th intelligent person. You keep doing the right things. My quote is more of a mindset quote, because this is what this session's about. Because wealth is an interesting one. There's a lot of things that people get tied into with wealth and happiness. And my quote here is, the happiness of your life depends upon the quality of your thoughts. That's my little quote of the week. It's not necessarily, it's just saying that, not thinking you'll be happy, but kind of use your thoughts. I don't know. What is it? I don't know how the best way to explain it.
I think it's saying that we're in control of our thoughts so that we can actually guide our own levels of happiness.
Yeah, definitely. I think, you sort of, if you attach yourself too much to the, if you sort of focus too much on whatever you focus on expands is another one that I think is a really great quote. So I'm speaking of expanding. I love expanding in the knowledge and just expanding people's kind of mindsets. We were talking before the show, and I'm excited for you to talk about some of the challenges that you've had, but just also share the if you're open to it, but also just the wisdom and how you overcome, because you've got a fantastic story, and I won't do it justice, but we'll get into that. But
Perfect. Well, what we'll do is we'll jump into our first sponsored ad, and then we'll dive straight into introducing this wonderful lady. Let's do it. This live session is sponsored by Scott Agate from Hello House. Scott has created the world's first property negotiation as a service business. So what does that mean? Well, let's think about it. When was the last time you negotiated on anything over $100, let alone a property that is going to be one of the biggest investments of your life? The vendor, they have a trained negotiator on their side in the form of a real estate agent. That's kind of like you stepping into the ring with Mike Tyson after never training a day of boxing in your life. These guys are trained professionals, and that's what they do day in and day out. And this is what Hello House does every single day as well. They negotiate on property to get the best buy price from the real estate agents. Scott Agate, he's the expert negotiator. He has been in this industry since 1995. He owned and operated 3 Bell franchises. Scott was the guy that was teaching these real estate agents all these agent games. He knows all of their tricks. Having him on your side is going to give you a massive unfair advantage and literally save you tens of thousands of dollars. Unlike other ways of purchasing property, Scott's incentives are aligned with you, the buyer, meaning the more money he saves you, the more money he makes, which is what you want. You need to have those incentives aligned. Scott has kindly offered our group a massive discount on the retainer fee for his service. So if you're looking to buy your next home or investment property, click the link below to get in touch.
There you go, Joe. Very, very seamless with that now. I love your mindset with that. It's fantastic. So, but the person of the hour, Louise, is who's in front of us, and I'm going to sort of steal Joe's thing. There's much more to and I'd love to hear more about your story than just this. And I've heard your story a couple of times, but you are one of Australia's most compelling speakers on the share market. As I said, I'd say you're probably one of Australia's leading sort of share market educators, as well as being, I almost find it funny saying this, but for over 20 years, you certainly don't seem like you've been in the sort of public sphere that long. You've also trained thousands of people to maximize their potential, which I think is almost Tony Robbins-esque. I know I'm throwing out some big accolades here, but I think the other thing that I find is very interesting, you've got degrees in, or you've got behavioral finance and degrees in psychology and business. So I think that to me sort of you really sort of epitomize that it really is about mastering your mindset to be able to overcome any obstacles that come your way to kick your goals. And tell us more about, I don't think, Phil, I did it as much justice as I could have, but tell us more about you.
Sure. Look, I've been trading for 32 years now.
Wow.
Oh my goodness. And boy, am I tired. One of the things that I think showed a lot of foresight for me as a 20-year-old when I first got involved in the markets was that I had no idea the twists and turns that my life would take when I first started being interested in making money out of thin air. So during the time that I've been trading, I lost a lot of money for the first 3 years. At year 3, I broke even finally. I left my job year 5, and it was because of a health issue. I had trouble with my hands and with my arms. I stopped moving for about 3 years, and It was lousy. I was very black, to say the least. I knew how to make money out of the share market, but without being able to type, it was really hard. So I traded with a pen in my mouth to hit the keyboard figures, to hit the calculator, to hit speed dial on my phone, to talk to my broker. He was a very kind person at that stage and did a lot of the maths for me while I was speaking out of the corner of my mouth with a pen in the other side so that I could actually buy and sell shares. So luckily, I'd already worked out how to make money before that disaster struck. I think that whole idea about where you've got to dig the well because you don't know when you're going to be thirsty really springs to mind. And I mean, really, who does know what's going to happen? We don't know what's going to happen. We have no idea. So to gather those skills, to gather those building blocks of success, whatever vehicle you're investing in, I think is so important. If you can do that before your back's to the wall, it's ideal.
Yeah, creating a solid foundation of knowledge, but also a solid foundation of wealth and a portfolio to be able to actually do that. What was because you've lived a very unique experience, right? Not many people are going to not be able to have the access to their hands. Like, what were some of the big mindset takeaways that you took from that experience?
Yeah. Oh, look, there were so many. And, I've had to replay them a few times in my life. Often when tragedy strikes, it is interesting how we react, isn't it? Recently, I lost my voice. I was just mentioning to you guys before the show that it's taken me 2.5 years to be able to speak again. And this is the first at night function that I've run because I could not speak at the end of the day. There was just no sound at all. I had 0 sound for 9 months, and it's all related to the same concept with my hands and with my arms. It affected my voice as well. So I think the things that I really learned is that we don't know who we are until we're in a very black place. There is something within me that hangs on to an invincible summer. There is some aspect that says I'm going to make it through. And even if it doesn't seem like that on that particular day, I always think if there's going to be another day at some stage that's going to have some joy, some light to it, then I just can't give up. And I have been so blessed and so honoured to meet people in such dire situations because I have spoken out about my health issues. When my arms were at their absolute worst, I had the honour of meeting Jim Edwards, who had 2% vision, and he inspired me to realise that, hey, if he can trade, then I can continue trading. I can actually see the screen. When I lost my voice recently, as in, we're talking December 14th, 2019, just to put the date on it, I, straight after that, met somebody who had his tongue cut out because of cancer, who will never speak. I at least had the hope that I would speak again. So I find that sometimes these things, you don't know who you'll inspire down the track, and you don't know who will be in your corner either. So to be able to have an income on the side where I didn't have to go to a job, I didn't feel forced by an employer to continue working. I didn't feel like I had to get better. I could take my time and do physio and do all the voice therapy. All of that just made it for a much easier life.
Yeah, wow. Yeah, I feel like you could write a book simply about your personal journey rather than, I mean, you've written many books about sort of share trading. Maybe you have, but yeah, that's you would have met some fantastic people. And before we get into the crux of where, do you want to throw up our disclaimer, Joe, to make sure we're covering that off? Otherwise, you should make him big.
This is our disclaimer. General advice only. We are not giving you any financial advice, and please seek out your own. It's generally nature and does not take into account your objectives, financial situation, or needs. Before acting on any of the information, you should consider it appropriate, having regards of your own objective financial situations and needs. This is just a conversation between friends and nothing to do with your personal situation. So please, let's continue.
Yeah.
I'm interested.
You go.
Yeah, I'm interested, Louise, because what makes it? I guess is it the freedom that you really like around the whole wealth side of things that got you into shares? Like, what actually got you excited and jazzed up about the share market and finances?
Oh, it's a good question, actually. It goes back to when I was a teenager. My dad had his own business before the days of office works in stationery, and we always had the best pens, the best pencils as kids at school. It was wonderful. But he was always struggling. It was always hard. There was never enough money to go around. We grew up quite poor. Actually, I can see that one of my primary school and secondary school friends is in this Facebook Live. So hi, Joanne.
No way.
So yes,
Wow.
Hi, Joanne.
that's so cool.
What a small world.
I know. So that was really interesting how it focused my mind. I wanted to make money. I wanted to make it big. I never wanted to be in the situation where I had to scramble for money. And in 1985, Dad invested in gold in the share market, and gold went ballistic, and we changed where we lived. We bought a boat. We had 2 cars. We had winter coats for the first time. Mum didn't have to sew us our clothes. I got my first bra because Mum handmade my previous bras because we couldn't afford them, because 4 little girls, and we all had things we needed. So that, to me, that 1985 year, it spun me around. I could not believe how much money came into the household in a big fat rush, and what that could do. And it just really made me think there's something in here for me down the track. I want to be involved in shares. I never want to have that level of poverty that I experienced when I was a kid. And certainly for my own children, I didn't want them to have to experience that either. I didn't want to have to dig up potatoes in the backyard when I was hungry. I didn't want to have to work out how I was going to get a job early. I lied about my age. When I was 13, I got my first job in retail because I needed money. I wanted to have money so I could have some of the things that the other kids had, but that my parents couldn't afford. So in retrospect, I mean, what a wonderful way to go, to have the example of what I didn't want, and then bang, have the example of where I wanted to move towards. So very, very lucky it all happened in that way.
Very polarizing.
I've got a question around, do you think it's possible to teach that sort of mindset that you had, or is it hard to, I don't know if you can actually get to that situation unless you've gone through it, or is it possible?
Yeah, look, it's interesting, isn't it? Because some of the people who have done very, very well that I've trained over the last 30 years or so, they have ended up shifting their mindset because they've hung out with people who had more than them. They decided that they had a bigger dream or a bigger goal. They wanted a bigger ocean to swim in instead of the little pond that they happened to be placed in. So I don't necessarily think it's that you have to be brought up in a poor situation. I don't necessarily think that you have to have a lot of wealth and have that as an example, but I do think it's up to us to work out what we want. And if you do want somewhere bigger to play, then heck, why not get it? We're in the best time in the entire world to be able to seek out riches and to gather it and bring a lot of people with us.
Abundance mindset. Love it.
I totally agree. I mean, this is why Jeff and I created this little group, right? The whole point of it was 2 friends love talking about property and investing and shares and wealth, and how can we get better, how can we get amazing people like yourself to have a conversation with us, because we've got a group of other people that are interested to hear about the same thing. And now all we do is, like, that helps level up our own thinking. And you talk with someone who has a $20 million portfolio and you can start to think, wait, you're just exactly like me, except you've done a few smarter things. And I can actually, if I just do what you did, I can get what you've got. Oh, that's really interesting. So I try and think about it like trying to acclimatize yourself with people that have these great things, and you realizing that you're fully capable of doing that if you're able to put the work in, but also having the right strategies around it as well to be able to go ahead and do it, which I guess is where that education piece comes in as well.
Yeah, and having those strategies is so important. I don't know if you know Scott Adams, Scott Adams. He wrote
Dilbert.
Lots of different Dilbert. Yes, Dilbert is the one that he's most famous for. Apparently, he's asked all the time, Scott, tell me, how did you do it? Please, please. And he used to give away all of this information, and watch as nobody implemented what he suggested. But then one person actually did exactly what he said, and he became a fantastic cartoonist himself just by following what Scott Adams said. And I think there's a lot to be said for that. We can follow in the footsteps of people who've gone before us, and we can do it where we're not stepping on the mines that they had to step on to get where they've got in life.
Yeah, I love Scott Adams. He talks a lot about not having goals. He talks about having systems in place.
You're talking my language. Systems. Yes, absolutely. Systems are the key. Yes.
The problem is, I'm a bit of a goals person, but I appreciate. I don't know. I love systems as well. So I like to sort of incorporate all sorts of things. Let's get into a little bit of We'll get a little bit of property. We'll sort of mix and match sort of things from motivation and mindset and all that. I want to know, because I really want to know a story about. Tell us about your journey with your first kind of property. Like you said, you were sort of intimidated, and I want to tell us more about that. How did it all start?
Yeah, for sure. Oh gosh, this probably won't be all that motivational for the people listening though, because I know you're all wonderful property gurus and I'm just not. So, so since I've given you up to date, okay, so we've pretty much got to the point where I was inspired by Dad. I'd started trading. I'd gone 3 years without making money and I'd just broken even. Year 5, I quit my job and I had the health problem. I was renting all the way through, renting. Every spare cent that I had went into my share market portfolio. I invested in my own education. I ordered books from overseas because there weren't any Australian books at that stage on the share market. I was so focused on getting money out of the share market that when we kept getting evicted from our places because people wanted to move into where we were living, it was driving me crazy. And by that time, okay, time ticks on, okay, I'm pregnant. And I'm like, heck, I think I need to lay down some roots here, because if while I'm pregnant or while I'm having my children, we get kicked out of a place again because some relative wants to go and live in it, or they want to knock it down and develop, it's actually going to not go well for me at all. So I had to become very adult, and it was terrifying. That first time that I took money out of the share market and put it into the property market, I vomited. I hugged the toilet.
Was it morning sickness or was it share sickness? Which one was it?
It was abject terror, because I was having to take money out of my fastball, out of the thing I knew made money, depleting my asset base in the way that had earned me freedom. And putting it into a vehicle that I didn't understand and I didn't like and I didn't know. So hardly inspiring, is it? I mean, since then, time has gone on, okay, and I've got multiple properties. My husband does property development. We're very focused on the time horizon of our investments, and property is a longer term investment for us, and we've got some medium term things too, which I can go into if you like. But I just want you to realize that if you're listening to this and you're scared and you're vomiting because you're so scared, that's okay.
That's really it's really interesting. I'll get into. I'd love to hear Joe's kind of first story, because I don't think I've ever kind of understood what Joe was feeling. But I was definitely not vomiting when I was buying property, but it took me probably 2 to 3 years to buy the first property. And I sort of thought, what was holding me back? And I think it was a similar kind of fear. It was the apprehension of sort of saying, well, am I making a mistake? How do I know I'm doing the right thing? And I think that's similar to a lot of people that buy a property for the first time. And now when I do it, I just say, it's like, well, how many zeros are going to be on that loan or whatever it is. I mean, it sounds a bit cocky. I hope it doesn't. I don't mean to sound cocky, but it's after you do it a couple of times, it's simply does the deal make sense? And if it doesn't, then what about you, Joe? Did you sort of feel nervous or anxious? Do you remember back that long ago?
No, well, it's kind of like that. It's kind of like that what we're talking about, right? Getting educated, and that's what we were doing. I was just reading all the books, meeting all the people, doing everything, and I'm like, oh, now I get it. Okay, but what action am I taking? I haven't taken that action yet. And yeah, I had a health diagnosis, and then I'm like, what am I doing? Why don't I just do it? Like, just do it, because I've got the knowledge. I need to take the action. So then I just jump straight in, and it's like there was a point where I'm like, yeah, I've got to actually do this. Like that, you can't just not do it, because why spend all that time, energy, and effort? And then also, I don't feel good about myself because I spent all that time, energy, and effort, and then I didn't take the action on it. It's the same as business. Like I've got a bookshelves full of information about marketing and people and business, and then you just don't start a business or run a business. It becomes, well, why are you wasting your time? Why are you wasting everyone's time in those type of conversations? So yeah, there was a tipping point for me that jumped me over the edge. But yeah, it's an interesting. But I love that you were so scared and you did it anyway. Like that's a big point. Like everyone's scared and you do it anyway.
Yeah. And that was this home. This is my family home. So yeah. So that was interesting how it goes, isn't it? I found it more difficult investing in a family home compared to the other property deals that we've done. Like, it was a different emphasis, a different emotional intent. It certainly wasn't something that I thought I would ever feel, because I mean, aren't women supposed to want their own home? Aren't they supposed to want this? This was all the things going through my head. Don't people want to lay down roots? Doesn't property come easily for people? Don't they relate to it because it's bricks and mortar and it's tangible? Like I had all of these revolting, conflicting thoughts going around in my head saying, Louise, you're inadequate in this area. You've only got one thing that you can master. There's only one way that you can make money. Why was that happening to me? I couldn't work out what was going on. And I think because of all of that, that's why I chucked. Yeah.
Do you think some of it came from, because knowing, sort of having heard you speak about your sort of background and your upbringing, do you think some of it came from your sort of childhood, sort of, I mean, I don't want to get on couch or anything here like a psychologist, but do you think that had something to do with it?
Oh, yeah, I'm absolutely certain. I remember my grandmother at one stage, she said to me that you have to always make money, Louise. Make sure you're the one making the money in the household. And she even came up with something that I thought was really instrumental for me. She who makes the gold makes the rules, as a quote. So if you're the one making the money, nobody can yank your chain, nobody can call the shots. And that includes, I mean, speaking openly with you, includes a man, because so many women are in a situation where they are incumbent upon their man to make the money, and they are actually in a position of weakness because of it. And I never wanted to be in that role. I always wanted to be the breadwinner. I always wanted to be the one to bring the money into the household so that I would get the say, and that nobody could basically lead me off into a direction that I wasn't comfortable with.
Very interesting. Yeah, it's such a great mindset. It's such a great mindset to operate on. And I guess with shares, this is why I love property, right? Is because you've got so much leverage. You've got a 20% deposit and an 80% loan owning an asset that's worth a lot larger. So you get the growth on the $500,000 rather than that $20,000. So rather than the, that 20%, $100,000 deposit. But with getting to $100,000 takes time to be able to actually get there. So there is a lower barrier to entry to the share market. And I'm not I am pro property, but I'm not anti shares. And I think that there's a place for all of the asset pool to be in at different stages of what your journey is. Because I like what you were saying before, is that property is long-term, and then you were talking about some medium-term stuff, but then shares being that short-term play. What's that medium-term stuff that you were talking about?
Yeah, so look, I'll just go back to where my husband was starting to be interested in property, okay, because this might answer it. So my husband has got a graphic design background, and he was working in a position where he was designing factory automation on a product called AutoCAD. So some of you might know that type of inventor. Yeah, 3D
hang
design.
on, you created candlesticks for the Australian market, and your husband created AutoCAD.
Didn't create it, used it. So okay. He was quite keen to leave his job, and when I had my little baby, my first baby, I said, yeah, you can come home for sure, but I need my sleep. I need my sleep because otherwise I'm going to be in hot water. So luckily from that I need my sleep statement, we've both been able to do completely a 50-50 bringing up our children together situation, because I wouldn't be able to do what I am doing now if it hadn't been for Chris Bedford, as opposed to Chris Tate, who's my business partner. Chris Bedford's the one I'm married to. If it hadn't been for Chris Bedford stepping up and saying, okay, let's do this. Let's do this, baby. We can do it. So Chris Bedford was then concerned about, what am I going to do? What am I going to do? Because it's going to be a little boring just staying at home with the kiddies. And he decided to get involved with property development. Now, the plus with all of that was that now we've got 2 vehicles covered. We've got the share market and property, and a little dabble into business as well, which are the 3 vehicles to create wealth. So the longer term sort of stuff, like I would consider this house a longer term investment because we're not going to be out of here for ages. I would also consider the properties that I own in our super to be longer term investments. So I don't trade that long term. I have an average hold time of about 26 weeks at the moment. But sure, some positions are 2 or 3 years old, but they're not 15 years old. They're not 20 years old. And that property horizon is really interesting from a long-term perspective. Medium term, we have a little bit of a, hey, I need that money, but I need that money type of discussion now and again. So we do things where we buy a house, knock it down and build 2 units. We did a 26-unit development, which interestingly wasn't as profitable as you'd think. It's got ego value, but it wasn't as profitable as you'd think. Yeah. We bought a tennis
Was it in?
court.
Was that in Victoria by any chance?
Yeah.
Okay, yeah. And was that not? I love property development. That's
go.
Issues with getting the whole sort of planning approved and that sort of. Was that
it sucked.
VCAT
dragged everything out.
Yeah. But anyway, go on. Yeah, so you
had other deals that were more profitable. Like you did like a 4-lot sub unit, and it was more profitable than your 26.
Yeah, we'd bought a tennis court and put 5 on the tennis court and built a little road up there that we got to name the road, which was pretty cool.
What was the
knocking
name?
Down houses and God, I can't even remember.
Bedford Road, maybe?
No. Do you know what?
Tennis Lane.
It was very much guided by what the council would let us call it. So it had an Aboriginal name, completely against everything we wanted to call it. But we were, after a bit, you could just go, okay, council, God damn it, let's just finish it.
What they want.
So knocking down houses and building 2 or 3 or 4 is a favourite. So all of that's medium term. So if we're thinking in terms of timeframes, the quickest we would have ever done it would be 18 months. Like that was super fast. I don't know if it's fast for you because you probably know more about what you're doing. But 18 months is the quickest, maybe up to 4 years for, the longest time frame in that medium term time frame. And for me, of course, it's shares. US as well. I saw somebody asked, do I do US? Yes. Anything that moves, basically, if I can trade it and I can make money from it, I'll give it a good fat wiggle. So that medium term view is fantastic for shares. And then I have also dabbled in the very short term as well. So there are no, in my understanding of it and with what I'm comfortable with, there's no shares that can ever, the property side can never really compete with shares in the short term. I'm not saying for every time frame, but with property, shares has got to be really the winner with shorter term. So if it's a few weeks to a few months, even up to a year, this share market gets my vote for the shorter term. So that's how we pretty much divide it, where we've got the long term, which is the property, the medium term, which is the financial markets and property, and the shorter term, which is the financial markets.
Interesting.
Yeah, and do you deliberately build a base of assets to put into? So, like, you're like, okay, great. The goal is now a $200,000 deposit that we can then put into a development. Is that like the goal that you're trying to reach, or how do you set up the release dates of when you're going to move the funds? Or
Yeah,
how does it
it
work?
sucks. That is really tough. There's a lot of behind the scenes discussions, high level discussions in the Bedford household. I need $100,000 by this date, but maybe add a 0 or 2 onto it. Sometimes it's like, oh my gosh, how much do you need? So it is very much incumbent on what is the opportunity ahead of us. And often, because with the stock market, you are turning over positions more quickly, it just means that I don't buy new things. I just leave it there in cash, waiting for the next property deal to finish. Yeah. We've been caught short before, though, there's no doubt. And the thing that I find interesting is the thing I focus on is that we can both withdraw a salary from a tax perspective. We both take a salary out of the trust that we've set up. That is my focus. But I notice when things are flying high, we're eating really well. Like, it's chicken breast every night. It's just amazing vegetables. It's fantastic. And when things are a little bit skinnier, it's baked beans on toast. And it's sort of my little way of shrinking and then expanding to be able to feel that I'm at least in control of the food. That goes back to the childhood, I'm sure.
Yeah, because on that, so regardless of how financially successful somebody could get, because I just, there's people in the group that have, I don't know, 20, 30 property, maybe there's probably people in the group have 100 properties, but regardless of, because you've been doing this, so you sort of still have a somewhat of a challenge to sort of, you have the discipline, I suppose, is what I'm getting at there, because I think that's the systems approach. Would that be sort of true? And how do you maintain that without just, because I don't know, I'm asking for my own kind of a bit selfish.
Before that first goal is finished, to move on to your second goal. Before the 100th goal is finished, to move on to your 101st goal. So every big thing that we've got in the calendar, we've broken down into tiny, minuscule baby steps. Sometimes those steps might only take 10 minutes to do. Fill in a form or go down to the bank, whatever that little tiny step is, to get that step done. So I think the skill part is to get the big goal in the first place and to be able to break it down into the smallest possible viable step. That to me is the skill. Everything else you can be a robot with. If you follow those steps through one after another, then you'll get to the overall end result. And that's whether it's property, shares, business. I think that to me is a cornerstone skill.
So how do we set that skill? Because I'm very good. Like, I just recently joined the gym again, and I set a limit to where I was going to be. I would lift X on this, X on this, and X on this. And then I didn't do what you just said, right? I didn't set a goal after my goal. Like, I got very close.
Yes.
I got to, X. I got to almost on the edge where I probably should have said, you know what, now it's time to set a new goal. But I then hit my goal, and then I went back the next week, hit that goal again, and then didn't go back to the gym for 6 months. So
yes.
have you got any tips for me? How do I do it?
Absolutely. Look, there are many different ways to approach this, but I do suggest you work out whether you are internally driven for accountability or externally driven for accountability. So if you're the type of internal accountability type of person, and if you wanted to do Gretchen Rubin's quiz about this, you'd be like an upholder. Okay, so I'm an upholder. I'm internally accountable and externally accountable, and that's where I get my kicks. Yeah, double whammy. That's it. But a lot of people, and most people, are obligers. Now, obligers are the type of person that they'll never let another person down, but they'll let themselves down on their own goals all the time. So they need
Right.
external accountability to be able to complement their own internal willpower. Willpower is so fickle, isn't it? It really is. So
Definitely,
if you were meeting a friend, Joe, down at the gym, I bet you would always turn up. I bet you if you knew that that person was waiting for you, that you would be there. So building in external accountability, it's not a sign of weakness. It's actually a sign of strength to know that that's what everybody needs. And if it's not external accountability with somebody on your level, you need a mentor, a coach, somebody to take you through that can smack you when you need to be smacked, that can be that unreasonable friend to say, look, Joe, I don't know if you've noticed, but, all right, and whatever they say, it's said with love, but then it can lead you on. So I think they're the two main ways that I've done it myself in the past as well.
Is that the
Wow.
4 Tendencies by Gretchen Rubin?
Yes, that's it.
I
love it.
I did some Googling. Yeah, I
Yes.
listen to a lot of podcasts. She was, when she sent out the book, she was on. That's just so, it's really interesting because, yeah, most people probably are the external. They need somebody to hold them accountable. It's it's interesting because it's sort of something that I think we all struggle with. So thanks for asking that, Joe. I want to ask the question, given that we're sort of seeing around the world and around with the news is sort of floating with inflations. I know you're not macro, you're more technical. But how do you stay out of the weeds? How do you sort of shut off from the noise? Because it can be hard. Like if you sort of see that the stock that you've put your trade on has done X, Y, and Z or reported this, how do you sort of just say, okay, great, I'm sticking to my formula. I'm not worrying about the news.
Look, I always think if the news gets bad enough, somebody will tell me. And they do. It's amazing. Total strangers come up to you and tell you that there's a war. Whoa, I had no idea. I try not to look at the news. I try not to do the whole deep dive into my news feed, even on Facebook. I aim to keep really pure because if I can just follow the thing that I've written down in advance, my trading plan, and if I can follow it step by step by step and not hear other voices in my head, that gets me the best results. So I am probably the least knowledgeable person about world events here in the entire chat room here because I choose not to. And also I found, and I don't know, if you actually think about how it makes you feel, is this doing me good or is it doing me a disservice? Like when I find that, like, remember way back when there was that pandemic going around? Yeah. I actually found physically, I really didn't react well to waiting for that 11 o'clock news briefing. That was the time I noticed, especially how physically I react to things. And I think it's so easy to switch that off and just say, no, we're grown-ups. We should be able to handle it. It's negative, but I can handle it and I can separate it out and I can not let it interfere with the rest of my life. I can't. I've just decided that I've realized I cannot. I am best when I'm sheltered. I purposefully made my two Chris's, my husband and my business partner, monitor the news for me at that stage. I said, if anything gets too bad that I need to know about, can you tell me? So that I didn't have to look. I delegated it away. They seemed to be able to cope with it. I knew I couldn't. So I do that a lot with the share market. I do that a lot with every aspect of my life, actually. I want to protect... Yeah, I want to protect myself so that I can maintain energy and be positive. I find I can easily slip backward if I don't watch the inputs.
Yeah, I totally agree. I think you can get sucked into the news and you get emotional, and it's something you can't control. There's no change that you can make. You set your status. You see people setting their status to this and that. It's like, well, you're not, like, you got a bumper sticker. You're not doing anything. Go and actually do something. Go donate some money, or if you're really worried, actions. Yeah. Anyway.
Yeah, I'm hearing
Um,
you. I'm hearing you. A lot of it is signaling, isn't it? You know, we're all
yeah.
such peacocks in the end. It's like, look at my beautiful tail. Please mate with me. It's not good.
Yeah. Well, it's interesting to see people's kind of people's approach and their reaction to it as well, because people often we react more to negative news, and that's why I mean
Yeah.
the agenda from the news is to get people to advertising. So it's whenever there's a very kind of topical hot button topic in the
Mm.
group, even interest rates as well, everybody has an opinion about where they're going, and I just but yeah.
Yeah,
And
Anyway,
we've been
Louise.
guided in that direction more and more. Like now, especially with advertising, they can monitor the number of clicks that they get through. So they'll split test a positive and a negative ad, and the
Mm,
negative ones consistently get more clicks. So that
yeah.
feeds into that. And before you know it, everybody's doom and glooming all over our happiness and our brightness. It's not good.
Yeah.
we do our
It's
best to not
strange.
problem with it, but yeah.
Yeah, we try and remove as much as we can.
Yeah, it's good.
One of my what I mean, we have the expert here of candlesticks, and for the people that don't know, Louise wrote one of you got a copy here,
Here we go.
the first books
Yes.
ever. So this is a can you tell us a bit of the history of candlesticks? And I
Firstly,
actually
I
haven't.
don't know if you can see that photo. Can you see that
You?
photo? I'm
Yeah.
a baby. What the hell? I'm just like this young thing there. Oh, goodness me. So, yeah,
So
candles.
for people that don't know anything about candlesticks, like what sparked the thing and how does it kind of work? I don't know if telling me how it can work is actually going to be possible within a short sentence, but let's give it a
Yeah,
shot.
we'll give it a go. We'll give it a go.
Yeah.
So with share charts, that's what I use to be able to make my decisions about the share market. So on a share chart, you've got price and volume action over time. So candlesticks look to see, is the sentiment bullish, where the share prices are likely to rise, or is it bearish, where the share prices are likely to fall? And it conveniently colors it a color. So green being the color of growth. If there's a lot of green candles on the chart, it means the close is above the open for each of those candles, for each of those periods, and it colors it in green, and red being the color of blood. So that's funds leaking out of the share market. If there's a load of red candles, it means that money's leaving that share. So looking at the color is so compelling. I love color. I love the whole idea that color can influence our mindset as well. So candles grabbed me when I first came in touch with them all those years ago, and I managed to bring that concept over to Australia. So they didn't let me bring candles as the book out first. They said nobody's going to read it, so get a best-selling book first, which I did with The Secret of Writing Options. Get a best-selling book first, and then we'll let you write the candles book. How dare they? So
Challenge accepted.
That's it. Challenge accepted. So the day that I held my first book in my arms like it was a newborn baby, it got delivered to the front door, 10 initial copies. I unwrapped it and I kissed it and I held it and I went, good, you're out of here. And this is the one I actually wanted to write. So I wrote it in 5 weeks.
Wow, that's impressive.
It was crazy because I was just so ready for it, that just poured out of me. I was obsessed. So yeah, the candles book, and then the Trading Secrets book followed. There's been a few editions of all of these. Trading Secrets, that's probably the one to get if you want to start, because that gives you the basics about trading. And then I wrote Charting Secrets, which is like the teacher's edition, where you can see how I worked out the chart. You work it out and then you see the answer. Yeah. And then I wrote one with my friend who's no longer with us, Dr. Harry Stanton, Let the Trade Winds Flow. That was just a labour of love, really. His book was, 40 years old. And to rewrite that with my darling Harry before he died, Dr. Harry Stanton, peak performance coach, Olympic coach, helping people get rid of nicotine from their lives, helping traders. My traders he's helped for the last 30 years. what a wonderful, outstanding person. So to rewrite that book with Harry was definitely just a passion project. I loved it. We've had him on our podcast, talkingtrading.com.au. He's spoken for my traders. He's just been an inspiration. So to lose him at around about a year and a bit ago, it was a terrible blow. I miss him every day.
So just back to candlesticks. So what, for the layman, what does it actually, what do we do? I guess maybe that's probably not as good question. You can't really.
What do you do to start? Read the book. Yeah. Why didn't I think of that? What you can do first is work out, does the share market interest you? And if it does, if you're looking for a way to have less of your money tied up because you don't need that massive deposit that you do with property, if you're looking for a way to use your property mindset to be able to diversify into another vehicle, if you're looking for a way to make money when property isn't booming as well, that is another thing to consider, then maybe the share market is for you. And I'm not saying it is for everybody here, but just maybe if you've got that little bubble of excitement that says, I think there's more, there could be more for me, then I think you need to investigate it. You start looking at share charts, start looking to see where your superannuation is invested. Most of you would probably have some sort of fund manager there that isn't doing a great job with the share market.
I actually, my nan passed away a while ago, and I got given all the shares that they had in the portfolio, and they had a fund manager for a bank, which I definitely won't name the bank. But what they did is they replicated an ETF and then charged 2% on top. So it was a 2.5% fee on top of an ETF, which is like a 0.05% fee. And literally it just mirror matched, like the returns that they got, they just chucked a fee on top. So
very common,
crazy.
Joe. Yeah.
It blew my mind.
I would really urge people to investigate it for themselves. I've even got a course, Trading Made Simple, which I'll give you for free. Go to tradinggame.com.au, register your details. I'll send you my course. That'll get you started. It'll also give you my trading plan template so that you will know what goes into an effective trading plan and just explore, if you're good at one thing, the odds are you'll be able to carry that mindset through to another vehicle. My best property developers are the ones who are the successful share traders. It's amazing to me. It's almost like they've gone, hey, this is exactly what I need to do here, and I can use that same skill set to go here and make even more money. It's magic.
One of the things I've heard on other podcasts is that property has the richest dumb people because it's so easy to make money in property. I just don't feel like I can. I just don't have the share mindset. My first share that I bought was Woolworths, and a month or 2 months, like over a period of 6 months, it dropped 30%. And I was like, yeah, Woolworths, it's not going to go down. It's, it's fundamental. And then I bought oil ETF. I bought oil, and then that tanked as
Somebody got invaded.
Someone got invaded. So
you know what?
I feel like I've got some scars.
One of my first shares was I bought Qantas because I thought, well, planes always go up. It's not like they drop out of the sky.
Oh, no.
I bought Sausage Software because it had a cute name. Toll Holdings because I thought they were the toll booth, and everybody goes through a lot of toll booths, especially in car parks. Tolls
are all over there.
So, yes. So don't necessarily think that where you start, Joe, is where you'll end up.
Very good point.
Joe's very busy at the moment, though. We are very.
I'm very busy. Yeah. One of the things that I've got a question on is, do I need to know, like in the type of investing that you do I need to know about that stuff? Like, do I need to know who toll is? Do I need to understand the fundamentals? Like, what is actually involved in the share? Like, do you just look at the charts and say, look, I don't care. The new CEO's come on and his name's Elon and he's just bought Twitter? Like, does that
I
factor
don't know
into?
anything about the companies that I own. Look, way back when I had a real job, I worked for a company called Dun & Bradstreet, which was credit information.
Yeah.
And it was amazing because at my fingertips, I had every fundamental detail about every company around the world. It was almost head turning, and certainly in terms of the delay in my decision making, it was massive, because you want to be able to make a decision quickly with these types of things, and when you keep on researching and researching, it's probably not conducive. I had a statistician who worked for me. I was a national manager there before I left my job, and the statistician and I did a little side hustle, a side project, to see whether good fundamentals reflected in an increasing share price. Now, we had the data, we had the knowledge, because I've got a stats minor as well, and my statistician was incredibly experienced. We could not get a positive correlation. So just because something has good fundamentals doesn't mean that it will necessarily make you money. And
the age of
since
correlation
then,
doesn't equal
yes,
causation.
that's it. Nice. We're bonding, Jeff. We're bonding. So that to me was enough, and I dumped fundamental information being a process in my decision making from that moment on. I know some people use fundamentals to determine which shares to get involved with, and then when comes into play when you're looking at the technical analysis. That's okay too. If you've got that as a thing, yeah, go for it. I don't. I just look at the chart.
Keep it simple.
Yeah.
Okay. Before we so I want to know, because we sort of skirt around and talk somewhat about this. So risk. What to you is risk, Louise? It's a big question, I know.
Yeah. What is risk? So from a share trading perspective, it's the percentage of my entire equity that I'm prepared to lose on any one position. So that's a bit detailed, isn't it? I guess you wanted something more philosophical.
No, that's good. I mean, what is that? What is that for you? Like, is that 1%,
It's
5%?
0.5%. So the back testing that I've done, I've got a wonderful systems tester, Scott Lowther. He's done my mentor program. I've been running my mentor program in conjunction with my business partner, Chris Tate, for 22 years. This is our 22nd year of running it. So, oh my goodness. And because it's a repeat for free course, we have got a beautiful community around us. They give us their data so that we can analyze it, which is a key aspect of being able to make good decisions. Scott Lowther, my systems tester, has analysed so much data on this, and we've found that the 0.5% risk outperforms 1%, and 1% outperforms 2% for portfolios that pyramid. So if you're happy to pile into a position because it's working, we call it be a pig. If you're happy to be a pig, then start out with a small position.
Start out with 0.5 instead of going 1 to 2%.
Yep, for sure.
Yeah. And getting in is an interesting point. And then getting out, like, is that how it works? You just go bing, bing, get in and get out really quickly? Like, how do you know when to get out?
Yeah, if that little baby share performs, if it's a good little share, I'll keep it for ages. It can play in the playpen with the other good little shares. They can all just play together, and it's beautiful. If you get that little rogue, little snotty brat, the type that kicks and pinches, then it has to go. So what does a snotty little brat share look like? It means one that is not going up. If it's not going up, and over the time frame that I'm interested in, then hey, it has to go, because the more you let that hang around with the good shares, the more it corrupts your own mindset.
Yeah. It's like there's a saying, you should let your winners run, and not this advice, let your winners run and cut your losses or cut your losers, but often people tend to do the opposite. They sell the one that's gone up, I don't know, 30, 40, 50%, and they keep, because they're like, I've lost that money, I've got to make it back.
That's it.
And it's it's kind of, and I think what I'm picking up from from a lot of your sort of is it's all about a system. It's about a process, and and that can be applied to any, whether that be property, whether that be any vintage cars. I think it's important to have a process, have a checklist, and understand if you don't have that, I think you're sort of flying blind, so to speak. So I think that's a really key.
And I think that is the key, regardless of the vehicle that you're investing in, to have that system. I certainly know I notice my drop in IQ as soon as I've got money in the market. I'm going to go with 50%. I'm 50% dumber when I've got money in the market. To me, unless I have that system, that pre-written system, where I've literally got a checklist that I can tick, 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 then I'm a functional moron, As soon as I'm emotionally invested, I'm just, hey, none of that's working well for me. It's far better for me to be objective, to have worked out that trading plan prior to having that money in the market, and to just follow that plan. Just do that next step. If that's what my plan says, then I'm going to do it. So switching off that part of you that second guesses yourself, switching off that part that says, I know better in the spur of the moment, is so important. Just following along like you're a moron is the best way to make money.
So what are some of the things on the checklist? Like what do we need to do?
Well, for entry, for example, for those of you that know a little bit of what I'm talking about here, but if you're a beginner, don't let this blow you out, okay? There's lots of time to learn, but I'm looking for a share that is breaking above its previous level of resistance on heavy relative volume. Now, that is my standard breakout entry, and there's a couple of other archetypes that I use as well, those absolute perfection type of looks that I'm looking for. But once I've got that, I'm in, and once it's dropped by a certain amount, then I'm out. And I just follow it up. Like probably if I look at each year, just to let's get down to some tin tacks here in terms of results, each year probably only 2 or 3 of my shares are really big winners, and the rest are or tiny losses, or really not fantastic. But those 2 or 3 winners are the ones where they just make my bankroll every single year. So as long as I keep on consistently putting those shares in that front end of the funnel, some of those will become those 2 or 3 that make me all of the money I need.
Yeah. So with how many shares do you how many of you monitoring at one time? Like, is there like a 50 or a 20 or how does it work?
So
that
right
way?
now, 22. Yeah. Right now in the market, there are 22 positions. It might be 12, it might be 0, because there are times when it's not good to trade. So, for example, if you've got the market dropping, and we're not talking about short selling because we're going to make things a bit complicated for this, but if the market is dropping, I purposefully will not enter new positions, and I've got a definite level that it needs to drop by in order to not get me involved in a new position. I'll let the existing ones run, because they're going, hey, let's just back that baby. But I won't get involved in new ones. And I think that's a real key, that overall, it's called a macro filter. That macro filter guides regarding whether I should keep on trading or not.
Is one of those macro filters, I don't know if this is proprietary, so let me know if I'm...
No, go for it, yeah.
When it goes into a correction, because we're sort of getting close to the US particular. I know the ASX is probably not quite there, but the US is getting close to that 10%. It might have just hit it yesterday, but I don't know what the futures look like in the US. But is that one of the filters, macro filter?
For those of you that know what you're doing, okay, run a 30 EMA over the top of the XAO, right? If it's above, keep buying. If it's below, don't enter new positions. That's
so an EMA is an exponential moving average.
Moving average, yep. And the XAO is the All Ords, or it can be like the ASX 200, the top 200 shares. That's probably the simplest macro, and I've got a volatility overlay too, which I won't. It's a little bit more complicated to go into, but if you want it, then ask in the chat and I can go through that, but we'll leave that. So, but really, for where you're at, look at your moving average, see whether there are people who are buying in general, and if they're buying, then follow them.
Yeah.
So are you seeing anything like this for property? Like, do you see like anyone in the market doing this type of analysis, but for property instead?
No, but wouldn't it be good? Maybe you two should develop a macro filter for property.
Yeah, I was talking. Yeah, people have asked us, and people have spoken behind the scenes, and I said that the only problem with it is I sort of see shares as less emotional.
Yes.
When I say less emotional, there's still very much shares people buy and sell on emotion. But the thing with houses is you've got roughly 70% of the market is owner occupiers. So how can you there's so much more emotion attached to the bricks and mortar, but I'm not saying it can't be.
I'm wondering as well whether it would be as easy to develop something because the time frame for turnover is a lot longer. So the frequency is required with data points to be able to get a good read. And I'm wondering whether the frequency in terms of turnover, I'm uncertain. But it's a good thought. It's a very good thought, Joe.
Yeah, the volume of stock on market. I mean, if there's an area that's turning over 200 properties a month, I mean, that might be substantial.
Yes. Yeah, you'd have to look at that. Yes.
It's going to be Joe, Jef, Louise, Chris, and Chris. I don't know. We're going to have to work something out with this so it makes a little bit more sense. Love it. Okay, well, I'm interested in one of the questions here is talking about track record, and I think that would be an interesting one to kind of go into because if it's working, like if it's not, if you've got a system and it's not working, it's like, oh god, okay, well there's no point in running that system. But it'd be great to hear that. What we'll do, we'll run into our next ad, and then we'll be free as a bird for the rest of the session. So let's do that.
Commercial property offers the highest cash flow in Australian property investing, offering exceptionally higher yields than residential. Now, we're talking 8 to 10% net yields. That's cash after all expenses, not this 2 to 6% gross that we see in the residential space. So for those that are starting out on their commercial investing journey, it can be exciting, but it's also a step not to be taken lightly. The expertise of a commercial buyer's agent can pay dividends to help you secure that high cash flow and high growth potential property. And this is why we recommend Steve Polisi of Polisi Property. With over 6 years experience in the space, Steve has over 1,200 property transactions under his belt. He has seen it all and knows the best locations right for growth. In a previous life, Steve was a chartered mechanical and structural engineer, so he draws on his mathematical and analytical skills that he's developed to break down what works best in commercial property. As with engineering, same goes with commercial property. It's based primarily on the numbers. So if you're curious about diversifying into commercial property, you have access to $100,000 in cash or in equity, book a call with Steve today and find that perfect asset for you.
Here we go. So
nice ad. I'm excited.
It's fun, isn't it?
I think we need to update it though, Joe. I think he's had more than 6+ years now. I think he's probably had 7 or 8. Good old Steve. Steve's on the call.
I'd say 7, yeah.
At least 7, possibly 8.
Get it.
So going. We were talking about track record. So
yes. How does it work?
That is something to consider. One of the things that you're going to have to play with is sometimes property is going to do better and sometimes the share market's going to do better. And if you get your ego bent out of shape at either of those extremes, that's a risk. So in terms of track record, what I'm looking to do and what I'd suggest everybody does is to look at the average rate of return and to try and beat that. If you pitch yourself, I'm going to aim for 80% a year, what you'll end up doing is you will force trades. You will take trades that are never going to be appropriate. You'll forget your position sizing rules and you'll get your ego out of joint, and it's not the way to go. So if you aim to get what the market returns plus a bit more, that is probably a better way to go, and monitor that. I do a 6-monthly review, and I suggest my traders do the same thing. And there are lots of things that you can do at that 6-monthly review, but the key one is to see, are you making money? And if you're making money, then how does that compare to what other assets are doing? So I think that is something to consider. And I can also see there are some people asking about, do I invest for dividends? No. Dividends are always a shock to me. Occasionally I'll get sent a dividend check, an actual check. I had to take a check down to the bank the other day. 2 people actually processed it. I said, look what I've got. And 2 people at the bank.
Do you know what this is?
For me. Yeah, it's like, gosh, this is old technology, isn't it? So clearly I didn't tick some sort of box that said dividend reinvestment. I try to dividend reinvest all the time. It's a very easy, quick way to be able to get that money flowing right back in, so I don't even have to consider it. It locks it away from my husband as well, because remember, we've got that slight war about where the money goes to. So any money that flows into the household, we aim to divvy up, whereas if it's already invested in the share, it just keeps on ticking along. And I think that dividend reinvestment plan should be a part of everybody's strategy, but I don't look at buying a share to get a dividend. Often those types of dividends plays, they are with shares that are not going up at an incredible rate. So you're sacrificing your capital growth for a tiny little bit of a rat pellet that they feed you so that you keep on that treadmill. And it's not really, an appropriate strategy.
And also, you're probably not in there long enough to actually get a sizable check in the mail anyway. Yeah,
exactly. So you may as well just go with the ones that, from a technical analysis point of view, are going up. If it's going up, the momentum's there, and it's likely to mean that you're going to keep making money out of it as well.
So one question I have is, how do you avoid the fundamental, like the shifts, like, Elon Musk buys Twitter, that, or let's say he sells Twitter, right? And it drops, and then it gives you a signal to sell. Do you just go, okay, do you factor that in? Like, oh, Elon just sold Twitter. Oh, okay, now it's all gone down, and it's hit my point where I have to sell, and now I hit sell.
I don't even look at it. I don't even know what's happening, Joe. It's like I just need to. I really need to impress on you the depths of my ignorance. I don't know how I can spell that out any clearer than saying I absolutely know nothing about world events and what's happening. I set my automatic stop, and if my auto stop is hit, then I get out. And I just do it again and again and again and again and repeat for 32 years.
Do you and speaking about, like, I suppose we didn't necessarily want to take it down the share, but I'm kind of I look at it and watch it a little bit myself. So do you have how do you sort of take do you have a take profit sort of do you have a trailing take profit, or how do you sort of work that?
Yeah, that's a more complicated question, actually. So let's cover it from 2 ways. Let's say the share's behaving that sideways up, sideways up, sideways up.
Yep.
Then I've got a trailing profit type of stop where it follows along past at the bottom of the share price action, and once it drops past that, then I exit. But let's just say you've got a little specky which has just gone ballistic. So you're in it, it's gone up crazy levels. Often that which goes up really steeply comes down really steeply. The angle of the incline matches the angle of the decline, not completely, but it's a sign of mania. I think we could agree. It means that people are not making decisions from a rational basis. And we know when people aren't rational, they can throw tantrums. Okay. So we want to avoid the temper tantrum throwing public. So if it's going straight up, I've got some parameters that tells me definitively, yes, it is going straight up. It's not just a visual check. And if it is corresponding to those rules, I sell out one third. I leave the remaining 2/3 to sit there, and then if they hit my stop, my trailing stop, then I get out of that. So that's been really good lately. There's been a lot of mining, energy sector shares that have gone ballistic, and it has been really helpful to have that in place.
So, can you overlay this stuff into cryptocurrencies as well? Like,
Yeah.
are you like playing in that field at all?
Let me just mention, Joe, that I am a licensed advisor with ASIC. So I have an AFSL, Australian Financial Services license. And now that I've mentioned that, you'll know yourself without me telling you, you'll know that crypto is an unregulated area. So that's a little harder for me to comment on. I can certainly give you a really big clue about how to trade them. But really, from an audio perspective, I'd really better let everybody decide how to fulfill their dreams.
Very wise, Joe, I must say.
Yeah, it's a good way. It's a good answer. Yeah, it's a good answer to it. I had another question, but I lost it. I don't know where it's gone.
You know, Joe, years ago, I had these two gay guys. They used to send me hand-drawn charts. This is before I realised that I wasn't allowed to give advice, way before the ASIC requirements. And they'd send me hand-drawn candlestick charts, and I'd comment on these hand-drawn candlestick charts and tell them, buy it or sell it, right? Years went on.
Oh, okay.
Yeah, I know. Years went on, and I finally said, these charts, they don't look like a normal share chart. You know, what is it? What market are we dealing in? And I'm thinking, you know, something European in my mind. That's where I was going.
Wheat.
And they said, no, they're taxi licenses.
So
and they were trading
the plates.
Taxi licenses, yeah. So if we think about anything that has supply and demand, any aspect of emotion that creates buying and selling pressure, that's where you can use candlesticks. Yeah.
So any emotion.
Yeah.
So Jeff, you were talking about the property market being quite an emotional market. When he said that, Louise, did that make you think, well, actually, there would be potential opportunity there because
I would love to do a candle on the property market. I think it could be a little bit more difficult though, because we don't have a firm open and a close.
Yeah.
That same property, perhaps we'd have to do a candle per property. I think that regulated open and close is the thing that really punches in the color of the candle, and I think I'd need that as a minimum to help you with your macro, Joe.
Well, you could do it with asset type, 3-bedroom house with 3 bedroom.
I like
the
that.
challenge would be the renovated versus unrenovated, but if you could get that out in the wash by a median, or you could even just start attacking the bottom end of the market, like, you know, and we got
you
something
have to
here.
Maybe factor in location, distance from the city, from a city centre. Ooh.
Yeah, this is the thing I said. This is the thing I said to Joe. I said, I actually said it to our other admin, Nick. I said the only problem with trying to use technical analysis or use sort of share share things is just the amount of variables you'd have. Like, how could you sort of like type of location within the suburb even as well? You'd have to you almost be somewhat comparing oranges with apples, maybe.
Yeah.
To some extent.
Yeah.
But it'd be interesting.
It would be. Yeah. So I know some people are asking about some specifics here about breakouts, which, you know, these people are talking my language. I love it. So
let's start. Yeah, let's get into the Q&A. I mean, there's about 15 more questions. So Rob's asked, when you have your share breakout on high volume, do you wait for the retest? How do you make your own share trading plan? Probably from Louise's website. I'll drop the link again. I don't think I did drop it, but I'll put it again.
What's the answer to this one?
Very brilliant answer there, Jeff. Brilliant. Yes. Let's talk about that breakout. So what I'm looking to do is have that long green candle breaking through a layer of resistance on heavy relative volume. And I'm looking for the very next period that is above that level of resistance. Okay, so I'm waiting in terms of, I know that's not what you're meaning by retest, but it's more confirmation that that is actually going to keep on going, because some shares, especially on lower volume, they prick their head up above resistance and then they collapse back down. So we're waiting for the period after that to be able to grab that baby for ourselves. And in terms of waiting for a retest, I try not to wait, because that retest may never come. You know,
Could
some of
take
these are
months,
just going
could take
up
weeks.
by like a rocket, and if you miss it, you miss it. You know, you should just go for the next opportunity, not that one. Try not to chase it, and try not to just pray that it's going to come back down one day, because it just may not. It may not ever. So you just work on your next signal, your next signal, your next signal, and just kiss them goodbye. You know, try to have a short-term memory with it. Try not to get emotionally attached to each position that you're in. Easier said than done. I know. I was in love with Wesfarmers. In love, I tell you. Yeah. It was just...
Wesfarmers is sort of boring though. It doesn't really ever do anything, does it? I mean,
Oh, Jeff, how dare you say that? Oh.
I'm sorry. I used to work for Coles. I used to work for Coles, not Coles. I used to work for Target. So.
Oh, it whined me, it dined me, it took me dancing. It was wonderful. But yeah, it dumped me like a hag in the alley, and I don't ever want to talk about it ever again. So yeah, other than that, you know, I think I'm quite detached. It's just Wesfarmers I'm still a bit hooked on from the early 2000s, I think it was. Yeah.
Hillary's got some support. I don't know if you know Hillary too.
Ah, Hillary.
Love. Is that Wes? Is that a person called Wes? Or is that
Wesfarmers?
Yeah, that's the code.
I think we're going to maybe take you out of your comfort zone here. Somebody's let me know if you. I know you said you don't really read the news, so it's
yeah.
Aaron asked. Thanks for your insights. You want to know about the current state of the economy and type of the investments are good. I think this is going to be probably you mentioned throughout this that you don't really look too much at this. So is this? Feel free to say you don't really.
Look, there's some areas that are moving at the moment. Lithium's moving. Some energy stocks are moving. Certainly resources have taken a smack lately, but there might be opportunity in that. You know, if you see a bottom candlestick reversal pattern during an existing uptrend, that would qualify as a retracement trade. And that's another type of my archetypes, that sort of marriage material perfect, absolutely gorgeous share chart that I'm trying to replicate as a template. That is a retracement trade, so you can look for opportunities there. Anything that's above its moving average, a 30 moving average, I'm probably going to have my head turned at. I'm probably give it a bit of a wink across the crowded room.
So one thing that I'm kind of getting from you is that it's just an if this then that scenario.
Oh my gosh,
you just
Joe, you're a champion. Do you know the wisdom in what you've just said? Can I just tell you about if-then statements? I don't know if you've done any study in this. From the weight loss industry, because weight loss is such a topical area and there's so much data, they've found that people lose the most weight and consistently hold it off, which is, of course, the goal for the weight loss industry, if they use if-then statements. So if that person brings donuts to work, then I won't look at the donuts. I'll make eye contact with that person and say, no, thank you, but thanks so much for bringing them, and get back to my work. Okay, so if this scenario happens, then this is my action. My entire trading plan is down to if-then statements. It is binary. It is specific. There are very few grey areas, and in order to be able to make decisions when that IQ is leaked out of my ear, because I have money involved, money's, I don't know what it does to us, but certainly doesn't make us sensible, does it? So once I've got that money involved, I need something very binary to be able to help me make a clear decision.
Yeah, I think so can this be all done by software? Because I'm kind of seeing that you've got a rule book and the charts go to do a thing and then it says, you know, take an action. Can it not just be all like automated? Like
now
where you don't have to, you just hit enter and it goes. And then...
That's what I do on a Sunday morning.
Can I have access to the platform?
So the key is to get things very clear and specific so that you know exactly what you're looking for. You know, before you choose a life partner, I mean, with my own situation, I was 20 when I met my husband sitting over there, and I had a checklist. I actually had a checklist.
Oh.
Okay.
Because
Wow.
you hear about people talking about that when they go, like it's like a wish list. But did he tick all the boxes? I mean, if he is,
Do you know, Jeff, this is now you're really getting to know me here. It was to the point where I have a friend who's a private eye, and he's very good at assessing people very, very quickly. He's very good with signals, body language. He and I served subpoenas for a few years to make money. I'd run up to the door.
Didn't know you could do that.
Oh, you
hey, John.
Miles in my little miniskirt. And yes, you've been served. So yeah, Graham used to take my boyfriends out for me and have a cuppa with them and tell me whether they were marriage material. I outsourced some of my choices.
I think I've actually heard. I think I've heard you speak about that before. I think I don't know.
Yeah. So there you go. So it's good. It's good to have that sort of checklist approach for what you consider marriage material in a share, what you consider marriage material in a property. You know exactly what are you looking for that's going to give you your jollies, and make sure it's specific, because what we ask for often we get. So make sure you've covered every base. Yeah.
Well, yeah, even in my business, and when we're looking at property, we have like 12 steps to go through, and each has a single point. We have phases of due diligence to go through. We have 3 phases of due diligence, and it's very easy just to go, if we don't make it, if we don't hit this, like, is it what we expect it to be? No. Okay, great. Can we renegotiate? No, we can't. Go to the end, restart again. If you can renegotiate, great. Here's the new offer price that's going to allow us to accept it. So I totally can see it being taking away all the emotion of the decision from the share side of things and just letting you just run the process and get the money out of it. And one of the things I'm getting out of this is that you don't need to be the most incredibly smart person ever. You could actually
you don't. You really don't. And thanks, Joe.
Oh, no, it's just giving me a bit of comfort, you know. I'm like, actually,
we're talking about Joe. We're talking about Joe.
No, yeah. I'm like, maybe I should get the book. Jeez.
Maybe you should. No,
I can do this.
Look, one of the things that I've derived a lot of pleasure from is teaching people how to trade. And a couple of the people that I've taught to trade to exceptional levels, one of them, a gentleman, I won't mention his surname, Mark from Perth, he had a terrible brain injury, terrible. He owned a tree felling business, and his friend ran over his head with a forklift.
Wow.
Jesus Christ.
So he had basically half of his face. Oh my gosh, the injuries, the operations that he had to cope with, the difficulty that he had in relearning every aspect about how to be a human, even things that you wouldn't even give credit for, because he'd lost his prefrontal cortex, basically. So that's his parental controls. So the instant rages, the instant laughter, the tears, all within a split second. It was extremely difficult for him, but he had a goal. He wanted his mum home from that retirement village so that she could die in her family home. And his dream was big enough so that he realized, heck, if I set my mind to it, the share market can be my vehicle. He bought his mother home. It was 24-hour nursing around the clock for this woman. She died in that family home, and Mark really can't hold a job. He in every way is impaired. There is almost no aspect of his life where he doesn't need help. And he is a fantastic trader. So I think the thing that we often do is we get in our own way. We put up our own walls. We have our own obstacles. We tell ourselves these stories, and because we're telling them, we believe it, and then we block ourselves off. And I just urge you not to do that. If you're listening to this and if you're vaguely curious about what the share market can do, stop telling yourself the story that I'm a property person, I can't invest in shares as well. It's a story.
Yeah. Yeah. I mean, I as you may have picked up, I certainly look at a few things here and there. I'm not I'm not an expert by any means, but I have do a bit of dabbling.
Yeah, it's fantastic. Yeah, way to think about it. Like if it is that easy, you know, it's just adding another. And one of the things is the transferable skills as well. Like surely there are a lot of transferable skills that go into this type of thing. So it's not just learning. It's not just. I mean, it's just like any education, right? You'll pick up key points from this, and then you take it into something else anyway. And
even from a legacy point of view for your children, you know, when I look at my two children, so I've got a 19-year-old and a 14-year-old. They have never known their parents to work outside the home full time. They have only had two parents completely involved with every aspect of their life. We are so close-knit. It is astounding to me how much my kids share with me of their intimate personal lives, and what an honor it is to hold that space for them and to provide guidance for them, because they have allowed me in. And I don't see that with the corporate professionals that I used to hang out with, for example, that were working the 60 to 80 hours a week, that were tied up with so many other parts of complexity and detail that they didn't have energy left to provide for their family at the end of the day. I feel so lucky that I did have the issues that I had from a health perspective that led me to investigate the share market, and that I've had the personal rewards of being able to help others develop the holidays that people want to go on, the schools that they want to send their children to, the time that they can commit to their elderly parents, the houses that people have been able to change because they've had money coming in through the share market, the houses they've been able to buy their parents because of the money coming in from the share market. It has just been probably the best ride of my life.
Yeah. So how do people get onto this ride, Louise? I know we've kind of been skirting around it, but how do we get involved? What do we have? Like, what's the best next step for us all to be able to be like, you know what, actually, I'm not committing fully to it, but I just want to check it out. How do I get involved with it?
Well, definitely come and visit me, tradinggame.com.au, and download that free trading plan template. Now, when you're getting started, it's probably a good idea to get a couple of books under your belt. So I would always suggest Trading Secrets and Charting Secrets. They've got to be the first two that you read. Those two, Trading Secrets first.
So we read that one
Charting
first.
Secrets. Yep. Read those, and then get in touch with me, send me an email. I don't know where you're at. It's really tricky because everybody's at different levels. I've got a mentor program that I run. I run it once a year in conjunction with my business partner, Chris Tate. Chris Tate is a big bald guy. He was the first Australian to prepare a book and to publish it on the Australian share market. He was an immunologist and a floor trader, and having that, I mean, we've just been business partners for the longest time. So he's known me for half of my life now. It's just been a wonderful business partnership. So we look after our traders in the mentor program, and we stick with them for life. We keep working for free for them on their goals until they achieve what they want to achieve, because it is a repeat for free course. So to have that behind you would give you a lot of confidence. You know, you can imagine after you've received that education, after we've tested you and we've given you the benefit of our information and how we trade and how to be street smart about it, you can imagine that would give you a lot of confidence and that you'd feel more comfortable knowing where to begin.
Yeah, definitely. That sounds a very comprehensive sort of thing. I love that people. I think this is Tony. He's actually gone to do the 4 tendencies quiz. Sorry, I got a little distracted by the comment. He said he's a questioner apparently.
That's a beautiful thing. You know what I really wanted though is I wanted you to put a question mark at the end of that.
It's an exclamation mark. Yeah. You definitely strike me as a questioner, Tone. I love your enthusiasm and your curiosity as well as. Yeah, I think because that's the way that we learn. We sort of, if you don't understand something, hopefully we get to ask it, because often people are too shy to sort of ask the question. So if anybody has any final sort of questions, we've probably got one more question we could do. Otherwise, we could. You can always reach out to Louise, I'm sure, and she may not necessarily get back to you straight away.
Big Troy. If Troy, you're on here, mate, you love a share. You love a bit of share trading, because he was talking about lithium.
Yeah. Lithium's going ballistic. Yeah.
If you've got any questions, mate, throw them in. It's a good opportunity to.
Do you know Troy? Or...
No.
Yeah. He's.
Joe does.
Yeah, I don't.
Might have ducked out.
Hey, Troy. Might have logged off. But I feel like we've covered so much in this conversation. It's been really lovely to. I feel like we got to know you a lot as well.
Yeah,
like,
for sure.
Not just
do you
talking
know
about shares.
The reason why I suggested that I would be prepared to do this, because I don't do a lot of these. I've been struggling with my voice. So, Jef, I've known you for years, but Joe, what a pleasure. And I know that at your very core, you want people to succeed. Our values are aligned. I know what you are aiming to do here, provide education and inspiration to get people to action take. All of those things are so high on my list of priorities as well. And I really think that's why the three of us really clicked, and you got the best out of me because of that. You helped keep it really easy and relaxed. And I've had the great night with you guys. It's been fantastic.
Oh, you make me blush. Thanks very much for just your, I suppose, accepting that message a couple of years ago and sort of having a chat with me, because I think that's the sort of thing that's unfortunately I'd love to do more of it myself, because I get people reaching out to me and I feel bad for not messaging them, but no, I appreciate that you did that, and here we are today. So hopefully, that's the sort of, it's the catalyst. If there's anybody you can ever help out, people just hopefully give a hand out to help, give a help up. I think that's something like that.
If you send me an email, louise@tradinggame.com.au, I reply to every single email personally. When I was a little girl, I wrote to an author. They never wrote back. I was crushed. And I thought to myself, when I'm an author, if anybody writes to me, I'm going to write back to them. And I damn well do. So do send me an email and I'll definitely personally respond.
Wow. Impressive.
That's good. It's amazing what happens in our childhood just drags along throughout all of our lives. But I wanted to, thank you again, Louise. This has been absolutely amazing. You've given so much, and I think we've gotten some curious people interested in the share market now, and we might have to start Oz share investors after all.
We got to get an AFSL before we do so.
Well, we need an AFSL first, obviously. We need so not financial advice. This is just, here's the disclaimer. This is disclaimer, Joe. Awesome. Great. Okay, well, let's go buy a property. Let's go join the, what is it? Trading game.com.au.
Trading secrets.
Tradinggame.com.au.
Trading game. Thanks, everybody.
Thanks,
See ya.
Bye.